So, how many people out there are actually more afraid of getting into a market when it's near or at highs versus actually buying into the market and then going through a possible correction down the road? It's funny because we find that there is more money lost, more money left on the table, as we say, from individuals that are afraid to invest because the market has done so well, because they're anticipating some sort of pullback in the future. So, in other words, sort of market timing, which we've discussed on this show many times, is not a strategy you should be using. This is this whole push and pull between the people that have FOMO, fear of missing out, versus those that consider themselves savvy investors that don't want to get into a market or an individual investment idea because it's done so well. Well, for those that are afraid to invest when the market does well, are you also afraid to invest when the market is not doing well? I've had conversations with individual investors and they tell me, Alan, I don't want to get into this market because it's just too high right now. It's going to pull back. And then when the pullback does happen, I ask them, okay, are we ready to invest? And their comment is, well, the market's struggling right now, so maybe we should wait as well. Well, when I ask the question, when will you invest then? When everything is just right? Maybe when the market is only declined by a little bit, not a lot, or has gone up by a little bit, not a lot. Obviously, that's kind of a silly approach to this. So you always want to be an investor, in my opinion. You always want to find best-in-class names. You always want to find names that are trading at good valuations. And as we always say, if those names or individual investment ideas pay a dividend, that's even a better idea. Understanding that markets, even if they are slightly overvalued, can continue to go up for a number of months, for a number of quarters even. We could see overvalued markets lasting many quarters. At the same time, we could also unfortunately see undervalued investments or markets lasting for a long time as well. So you never can time these markets or an investment idea. You always want to buy good quality, and you never want to just, have this overall fear of getting in. So one chart I wanted to start with, I have two charts here on this topic, is a chart on a name, yes, Nvidia. Nvidia is a name that we talk about a lot on this show for obvious reasons over the past little while. And so here's a name, Nvidia. I wanted to touch on, if you look on the far left-hand side of this chart, you will notice that stock price was below $300 a share. And this wasn't that long ago. We're talking a year ago, maybe a little more than a year ago. It actually got down to maybe about $125. And when that stock started to rally and started to move higher from 125, 150, all the way up to 400, if you were an investor, did you think that was the top? Did you stop investing in this name because the stock actually couldn't go higher? It was impossible. It had already gone up 4 times. How much higher can it go? Well, take a look at the right-hand side of this chart. Stock of Nvidia actually passed $900 a share recently. It's pulled back a little bit to around 885, 890 in that range. I think that's where it's trading today. Earlier this morning, it actually went back above 900 for a brief moment. So had you said to yourself, you know what? I'm not going to buy this stock because it's already gone up too far, too fast. I'm going to wait for it to pull back. Well, unfortunately, really haven't had the opportunity as this stock went even higher to $900, over $900 a share. A second chart I wanted to show is just a chart on the S&P 500. And another call on the S&P 500 would be from investors looking at the overall macro picture and looking at the index. You would see a pullback, COVID, in 2020. You see that on the left-hand side. A nice run-up in 2021. And if you thought, well, hey, maybe this is as good as it gets, in the middle of 2021, you would have been wrong. Stock market continued to go higher. I guess the fear of missing out trumped the fear of getting into the market at that time. 2022, as we all know, was one of the worst years for the S&P 500, 4th worst year ever in history. And then in 2023, here you have the market moving higher again. And we now sit at all-time highs on the S&P 500. So now I pose the question to all of you. Would you get into the market today? My answer is yes, because like Nvidia, for example, if you do your homework, you'll be able to find good quality investments that are still cheap. Nvidia, for example, is cheaper today than it was a year and a half ago on an earnings per share basis, trading at 35 times earnings versus 50 to 60 times earnings where it used to trade. So if a good quality investment is going higher, but for the right reasons, if the stock market or an index like the S&P 500 is going up for the right reasons, this is an investment idea that you can get behind, and you should not be afraid to put some money to work. And I know a lot of people may say, let's wait for a pullback. But you just don't know when that pullback will happen. Will it happen 1,000 points from now in the S&P? Or if it's the TSX, will it happen, 1 or 2,000 points from now? We all know there are corrections and pullbacks in the market. They happen, on average once every 5 years, maybe a couple times in a 10-year period. But if you wait for them, you're definitely going to miss out on a lot of the gains and leave a lot of those gains on the table. So going forward, don't have that fear to put money to work in a market, because as I always say, there's always an investment out there to choose, but you just have to do the homework to find it.